The on-chain data for Shiba Inu is screaming a story the price charts aren't telling. Massive token outflows from centralized exchanges are hitting the market, a classic signal of accumulation. The question is, are these whales preparing for a year-end rally, or is this a strategic repositioning for a much larger move in 2026? Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you if you're curious about anything related to Shiba. If you want to keep informed about all the latest news forecasts and stay ahead of the crypto industry, subscribe. To get more Shiba news, be sure to click the like button. Please note that by the time you see this video, some rates may have changed. Financial advice is not included in this video. In the volatile world of meme coins, on-chain data often provides the clearest signal of market sentiment, cutting through the noise of social media hype and short-term price fluctuations. The movement of tokens onto or off of centralized exchanges is a particularly critical metric. When tokens flow onto exchanges, it typically signals an intent to sell, increasing the available supply and creating downward pressure on the price. Conversely, when tokens are withdrawn from exchanges known as net negative flow or exchange outflows, it suggests that large holders or whales are moving their assets into private wallets for long-term storage or cold storage. This action effectively reduces the immediate selling pressure and is widely interpreted as a bullish sign of accumulation and conviction. Today's focus is on the sheer scale of these recent outflows, which analysts note are among the most significant seen in the final quarter of 2025, suggesting a major strategic shift by the largest players in the Shiba Inu ecosystem. The on-chain data for Shiba Inu is flashing a strong accumulation signal, with massive token outflows dominating the net flow metrics. Approximately 459 billion Shiba Inu have been withdrawn from centralized exchanges over the last 7 days. This substantial movement has created a supply thirst on exchanges as the available tokens for trading decrease. Furthermore, a more granular look at whale activity reveals an even more dramatic picture. A recent surge in large wallet movements saw over 8 trillion Shiba Inu withdrawn from centralized platforms. This is not an isolated incident. Over 125 billion Shiba Inu left exchanges throughout the month of December alone, a consistent pattern that analysts interpret as a clear sign of long-term accumulation. This sustained large-scale withdrawal of assets from liquid trading venues suggests that the largest holders are making a strategic bet on the token's future, moving their holdings out of the immediate reach of market volatility. The market's immediate reaction to this massive accumulation signal has been cautiously positive, despite the thin trading conditions typical of the year-end holiday season. As of December 28, 2025, Shiba Inu is trading at 736 units, marking a notable increase of 1.41% over the last 24 hours. This price action is significant because it suggests that the accumulation pressure is beginning to outweigh the general market malaise and the low liquidity environment. The token's market capitalization has also seen a healthy bump, now standing at over $4.3 billion. Analysts note that this is a classic scenario where on-chain conviction precedes a major price move. The reduction in exchange supply acts as a coiled spring. Any significant buying pressure in the new year will encounter less resistance, potentially leading to a sharp upward price correction. The current price increase, though modest, is a testament to the bullish sentiment being driven by these large-scale, strategic withdrawals. The technical evidence from the blockchain strongly supports the accumulation narrative. Net flow data, which tracks the difference between tokens entering and leaving exchanges, has been consistently negative for Shiba Inu, confirming that more tokens are being moved off exchange than are being deposited. This movement is crucial because it directly impacts the token's available float, the number of tokens readily available for sale. When the float decreases, the market becomes more susceptible to a supply shock, where a sudden surge in demand can lead to a rapid price increase. Analysts note that the wallets receiving these massive transfers are often new or have a history of long-term holding, further reinforcing the idea of accumulation rather than a simple transfer between exchange hot wallets. While some data suggests mixed whale behavior, with a few large holders offloading some tokens, the overwhelming net effect is a significant reduction in exchange supply, a technical indicator that often precedes a major bullish reversal. Analysts note that the implications of this sustained exchange outflow are twofold. First, it signals a high degree of long-term conviction among the largest holders. By moving trillions of Shiba Inu into cold storage, these whales are signaling that they are looking past the short-term volatility and betting on the long-term success of the Shiba Inu ecosystem, particularly the utility provided by Shibarium. Second, the outflows have a direct, tangible impact on market dynamics. The reduction in exchange supply fundamentally alters the supply-demand equation, making the token more scarce in the immediate trading environment. Sources suggest that this strategic positioning is a calculated move to capitalize on the expected return of liquidity in January 2026. The whales are essentially setting the stage for a potential supply squeeze, where a small amount of new capital entering the market could have an outsized effect on the price. This shift from speculative trading to strategic holding is a sign of the token's maturation within the crypto landscape. The Shiba Inu community, often referred to as the Shib Army, has reacted to the on-chain data with renewed optimism. Social media platforms are abuzz with discussions of HODL and supply shock, with the outflows being celebrated as a validation of the token's long-term potential. This community sentiment is a powerful, self-fulfilling prophecy in the meme coin space, where collective belief can drive significant price action. Developers, meanwhile, continue to focus on the underlying utility that is attracting this whale accumulation. The successful scaling and adoption of Shibarium remain the core focus, as the Layer 2 solution is the ultimate mechanism for creating organic demand and utility for the token. The developers are keenly aware that the long-term value proposition is tied to the ecosystem's functionality, and the whale's accumulation is seen as a vote of confidence in the ongoing development efforts. Short-term 1 week, 1 month, analysts predict that the price will continue to consolidate around the current levels, with the key resistance level to watch being the 750 unit mark. A sustained break above this level, coupled with continued net negative exchange flow, would confirm the bullish accumulation trend and could lead to a rapid move toward the 800 unit range. The immediate forecast is for low volatility until the holiday period concludes, but the underlying on-chain pressure is building. Long-term 3 months, 3 years. The long-term forecast is overwhelmingly bullish, provided the accumulation trend continues and is validated by the successful adoption of Shibarium. The strategic positioning of whales suggests a belief that Shiba Inu could shed another zero in 2026. Analysts note that the token's derivatives market, with a current open interest of $75.76 million, is relatively low, indicating that the spot market accumulation is the primary driver, which is a healthier sign for long-term growth. The ultimate long-term catalyst remains the utility and transaction volume on the Layer 2 network. While the exchange outflows are a strong bullish indicator, a balanced opinion must consider potential risks and alternative interpretations. Analysts caution that not all outflows are accumulation. Some large movements could be strategic transfers for over-the-counter OTC deals, which bypass public exchanges and do not necessarily signal long-term holding. Furthermore, internal exchange rebalancing or security upgrades can sometimes be mistaken for whale activity. The low trading volume and thin liquidity during the holiday season also amplify the impact of any large movement, making the data appear more dramatic than it might be under normal market conditions. Investors should therefore view the outflows as a strong hint of bullish intent, but should also monitor the price action and the return of trading volume in the new year for confirmation of the accumulation narrative. The on-chain data is clear. The Shiba Inu supply on exchanges is drying up. Trillions of tokens are moving into the hands of long-term holders, a powerful signal that the largest players are positioning themselves for a significant move. This strategic accumulation, coupled with the ongoing development of Shibarium, paints a compelling picture for 2026. The market is set for a potential supply shock. Don't miss our next update. The day is over now. Remember to give it a big thumbs up. To see our most recent material, share it and subscribe to the channel.